So what's going on, guys? This is Manda with M Traders, and today we're going to be talking about natural gas, and I think today is going to be a gap down. So make sure you guys stay tuned and watch the entire video. See ya. So what's going on, guys? Again, Manda with M Traders, and for those who do not know who I am, I basically trade natural gas leverage ETFs. But for that, you need to know what natural gas basically fundamentals are doing to the price. So that being said, if you would like to find more information on how to trade this specific commodity, or maybe other commodities that I might mention in my streams, make sure you do subscribe down below and click the notification bell as well. If you would like to talk to other like-minded individuals, I do have my Discord chat open, and it's free, so make sure you do subscribe to my Discord chat, and I will see you there. Anyway, so let's get started. Right now, over the weekend, we did had a loss of HDD, so we lost about 22. So we do expect a gap down over 3%. So it can be 3 to 4%. I mean, I don't know how many times I've been saying on my streams that natural gas depends a lot on weather models, and weather models can flip on a dime anytime soon. So that being said, we do expect the gap down coming up, and my strategy is just still hold my longs, and I'm going to be doubling down at market open. One of the main reasons that I want to do that is because the polar vortex seems to be gaining power. However, it's still, the weather models still have not shown the push down to the lower 48s. Can that happen? Yeah, most likely will happen. When is it going to happen? That I am not sure. However, my strategy is to keep buying the dips and selling the rallies. I prefer to be in UGAZ or boil if during this time of the season, just because I don't really like to short, during winter, right? So that's kind of more risky for me. The risk reward is not there if you're trying to short during the winter. That's a basically hit or miss. Instead of me just buying the dips and selling at the rallies, reducing positions, averaging down, and so on and so forth. So each person needs to have their own type of trades. The way I do it, I like to buy the dips and sell the rallies. And a lot of people have told me, how do you identify when a rally is over for the day? Well, a good example I'm gonna show you guys, it's right over here. So at NG on Thursday, this was 12/19, which it was Thursday, we knew that we were gonna have a pretty bullish report. So I did buy a market open. I tripled down my position on market open. And one of the things that is you guys got to take in consideration is this. Right now, for me, from previous technical analysis, I did found that 2.30, which is around here, 2.30 was a pretty good resistance slash support, right? We saw it bounce already from 2.30, and we also saw it reject. So this was one of the key indicators for me that, you know what, if it rallies up to here, I'm going to reduce position and going to be averaging down if in case it does fall. So I divided the market open. We had a pretty bullish report. We saw that natural gas went above EMA 39, right? Just passed right through it. And then once it hit 2.30, I said, you know what, I'm going to reduce my position. So I sold half of my position based on these indicators, which is an area of confluence. The 2.30 was my resistance, and also my EMA 39 on the 1 hour. Let's look at the 4 hour. Different time frames give you a different it lets you see the big picture, right? So for me, this is an area of confluence. Area of confluence is, in my opinion, is when various indicators kind of not collide, but they intersect. So in this case, if you guys look at this right here, you might not see the circle very well, but if you guys look at this area right here on the 4 hour chart, we saw that natural gas went all the way up to EMA 39 on the 4 hour. It rejected. It so happens that we also got resistance at 2.30, so I decided to cut Based on these indicators, I decided to cut or take some profits and also buy the dips. That's one of the main reasons we're like, oh, how do you know that the rally is over? Well, you can look at several indicators and also fundamentals, right? So fundamentals, we still show that we have bearish, we're going to have a bearish December, and we were waiting for that, those weather models to show that the polar vortex disruption is going to happen. It's going to come down south to the lower 48s. So what I'm going to do, I'm going to buy the dip, sell at the rally, and I'm going to base that on my indicators and also fundamentals. So if I start seeing bullish and bullish changes, I will be reducing and just averaging down just the way it is. So yes, I did buy again over here. So with the gap down happening today, I think we might hit probably around 3% gap down, which, let me see, how much would that be in UGAZ price? There you go. Much better, much better. We may even hit support, which is about 4%, about 2.32. So that might be a double bottom. I do believe we're gonna be somewhere in this range when we gap down. We might be somewhere in this range. For me, that's going to be a buy the dip. Remember, you do your own research, you do your own trades. Just in my opinion, I'm going to get in once market opens, if we are able to be at this area when market opens. And also, you just got to look at the trend on a daily basis. See if it's convenient for you to get in that entry, right? So for me, in this case, I'm going to be looking at it in the morning. I'm going to see what the 00Z models are saying, the 06Z models are saying, and based on that, when market opens, I'm going to be going back in natural gas. So that being said, I do expect a gap down. Let's go back to the HFR weather website. In case you guys don't know, this is what I like to use to kind of gauge what's going to happen with natural gas. We did have a loss of TDD, so about I want to say about 22 HDDs total over the weekend since Friday. And you can see this was pretty bearish, and this might still continue to do so. Tail end is still not as bearish, but definitely towards basically about 12:30, that's when things are going to start shifting into the colder side. But again, just be careful when you trade. Only risk whatever you are willing to lose. Don't go all in because somebody said, oh, it's going to be very bullish. Well, it will become if it plays out. It's going to be, the risk reward is there for the bulls. We see a lot of buildup or power building up in the north of by Siberia area. So we want to see this push down towards the lower 48. We need to see this ridge go up to Alaska to help that pressure, or put pressure on the cold front and come down to the lower 48. So that's what I'm waiting for, and that's why I'm going to still continue to buy the dips. And in case that doesn't happen, then I'm going to start reducing positions, averaging down, hedging, whatever I need to do in order for that to happen. So overall, my strategy for tomorrow is buy the dip, look at the weather models, and go from there. So make sure you guys do stay green. And if you haven't signed up for HFR weather website, which is actually pretty cheap, $150 for the year, make sure you look at the description down below. There's a link. Just click on that link and it'll take you there. So instead of you playing blind, that's not bad. Or if you want to do monthly, you could also do monthly to see if you like it, right? It has a lot of more information on how the weather is it's looking. This is not an operational model. Okay, this is the ensembles models, so it's different from operational. Ensemble is a little bit more refined. It takes into consideration all the operation runs and basically puts them into a cluster. Basically, that's what it is. So we see a lot of build right over here. We need to see that ridge kind of push this area down to the lower 48s. So that's what I'm waiting for. And make sure you guys stay green, and I will see you maybe tomorrow. So see you tomorrow. Later.